Hello, welcome to Smart Investing. The drama is not over. Stay with me until the end of this video. We're going to go through all the detail about the market update and also what has been the latest news on the tariff war. Please subscribe, like, and leave a comment. It's going to help me to grow this community and make this community successful about investing. We're going to make money together. We're going to go through this tough time together, and we're going to really make sure that everybody is not going to be left behind or make a very stupid decision why this is a very tough time in the market. So we know that Donald Trump has again escalating the trade war with China. Obviously, he has agreed to suspend all the tariff for all the other countries except China, where China now has decided to put 148% on all the imports on China. So what I wanted to tell you is that, you know, this is a war that China cannot win. Whether you agree or not, China has a trade surplus of about $1 trillion. They export to the US about a bit more than $500 billion. So half of the trade surplus is with the US. If they get half of the trade surplus done, the economic situation of China will be catastrophic. They're going to collapse. There are already a lot of problems with real estate, all the employment, all the surcapacity. Already a lot of companies are trying to diversify from Chinese manufacturing. They go to Vietnam, India, Cambodia, all these other countries that are willing to take all the business from China. So if China doesn't cave, they're going to force all the US companies, which means the biggest company in the world, the most powerful company in the world, to go to other countries like China. They're not going to win this war. They're not going to win this battle because they know they are too dependent of the US consumer. US consumer you cannot change. China production you can change. You cannot substitute the US consumer for other consumer. In the world, there is no such thing as US consumer. They consume the most in the world. Even you go to Middle East, Africa, even Europe, nobody can compete against the US consumer. They consume like hell. This is a game they're not gonna win. With 148% on all import of China. That means if the US still import $500 billion of import, then the US is gonna make like $700 billion a year of tariff, which is insane. That's not gonna happen, you know. They're gonna switch to substitute goods. This is what happened, you know. People say, yeah, but inflation and all this. I understand there will be inflation for some of the products that there is no substitute, but there will be probably a lot of substitute product for Chinese production made, you know. So this is what people don't take into consideration in the equation. You're going to force the consumer to pick other products they were not picking before because the Chinese product were cheaper. But with the tariff, they're going to force consumer to have new behaviors, new choices. And if it lasts a long time, then all these new choices will become a new habit. So it's going to be difficult for China to take this consumer back when they decide finally to cave to the tariff negotiation with the US. They're not going to win this war. I tell you, they're not going to win this war. It's a matter of time before they cave, the market rocket again. Look at what happened yesterday. Of course, I understand the price went down a lot today. Not as much as the price went up yesterday, which means that there's still a market, you know. We're going to look at the chart, but the market didn't correct back to the lows of yesterday, which is a good sign. We are more or less half of the rise of yesterday, which is still 5% up from yesterday's low. So I don't say that everything is rosy and everything is fine, but if the rest of the world caved to the US tariff, if the rest of the world wants to negotiate with the US to get a good deal on the export to the US, and the same for imports from on US product, if China is the only country that don't cave, what they can do? They're going to force all the companies to go elsewhere to make the product, you know. And there are a lot of countries who wants to take the business from China. It's a very competitive world. Very competitive world. So, I mean, leave me your opinion in the comment. I want to know exactly what you think about this, you know. Whether China or the US is going to win this war, you know. The situation in China is not good. Not good at all. So just imagine that they stop to export. A lot of the company are gonna go bankrupt. They're gonna close. Millions of people are gonna be unemployed. It's not a joke, you know. They don't have like social security and all the stuff like we have in the West, especially in Europe. If you don't work, you still have government give you all the money for everything you need. China is not like this, you know. You don't work, you're just gonna die, you know. Anyway, let's go through the market. So again, the QQQ, you can see. Today we retrace back, but we are more or less still above 50% of the retracement of yesterday, you know. Yes, look. Let me say Fibonacci retracement. Let me see, yeah, Fibonacci retracement. Look. We are back more or less 50% from the highs of yesterday. a bit more than the 50% of the year of yesterday, which is good. It means that the selling pressure is not as didn't manage to bring all the price back to the lows of yesterday's, which is a net positive, you know. And it could be the new a bit of trading sideways, maybe a bit lower down, but we actually fill the gap in this one, fill the gap of this one. So we felt actually two gaps in the same day, two gaps, this gap here and this gap here. So let's see how it goes tomorrow. But I think it's still a good news, although that we retrace a lot, 50% of the upside of yesterday. I'm not negative at all on the market. SPY, same story, I believe. Fibonacci retracement. Let me see. Yeah, that's it. A bit above 50%. I mean, what do you want more, you know? I think it's not surprising. You have a bit of retracement from yesterday, historic move. It made history yesterday, one of the biggest one-day increase of the S&P and the Nasdaq, you know? It's not nothing. Just so how much people are willing to buy. So let's have a look at the... Hold on. Let's have a look at IWM. Same thing, you know. Actually, all indices retraced 50% from their highs of yesterday. But the volume is much lower than yesterday's volume. You can see here the volume on the IWM, not as much, probably half the volume of yesterday. The same volume here, much lower than yesterday. For the QQQ SPY, volume also much lower than yesterday. You see, volume is going down, which is also a good sign, you know. If you look at Max 7 went down also 50% more or less of the highs of yesterday, and the volume very, very low as well, almost half the volume of yesterday. That's mean at this point, you know, if there is no new catalyst, no new triggers or recession or whatsoever, it's very difficult to go much lower than from now. I mean, we've seen so much drama and so much volatility. It's very difficult to get worse than what we have today. Let's look at the VIX. The VIX increased sharply again today, you know, but still came down a lot. You see, it came up from 34 to almost the highs of the crisis, you know, close to 54. And then on the same day, it went from 54 back to 40. Just imagine this reverse hammer, you know. This is a reverse hammer. It's like long candlestick, you know, long candlestick with a big tail, you know. And this tail means a lot of pressure went out of the market, you know. The pressure increased during the day of trading, and then at the end of the trading, then the pressure went down a lot, you know. And that's not nothing, you know. This type of candle, you cannot joke, you know. AMD also retraced 50%. I think all the major stock retraced 50% from the highs of yesterday. Palantir just minus 372. SMCI minus 825. Still the trend is up, you see. Clearly, you have higher lows, higher lows, higher lows, higher lows. What can you do, you know? It's probably an upside trend, you know. Otherwise, you have euro dollar. The dollar still losing value. Ten years yield increased quite a lot, you know. So the pressure on the 10 years yield is still on the upside. And it's very surprising because you know that the inflation is less than expected, you know. We're going to see the economic data less than expected. So the rate should go down, you know. But here the rate is going up. Very, very interesting, you know. Very, very interesting. You see the 10 years rate going up while we have inflation going down, you know. Unless the overall market and the Fed expect the inflation going to go up massively from now. But in the data, you cannot see this massive increase of inflation yet. Let's look at the economic data. Economic calendar. Today, we had quite important data, like continuing jobless claim, 1,850,000 jobs. Forecast, 1,880,000. Core inflation month over month, 0.1%. Forecast, 0.3%. Prior is 0.2%. You see? Sharp decrease from the inflation month over month. Core inflation rate year over year, 2.8 as opposed to 3% forecast and 3.1% prior. That's a huge decrease, you know? Inflation rate month over month, minus 0.01. Minus 0.01%. Expected 0.1%. Prior 0.2%. For me, the inflation clearly goes lower, much lower. Jobless claim, 223,000. Expected 223. Prior 219. So we don't see an increase in unemployment, you know. At least not yet. Tomorrow we have the core PPI, core PPI for everything. So let's see tomorrow. But I believe the core PPI will be much lower as well. I don't see how, but usually the PPI after is reflected in the CPI. So let's see what the PPI will be tomorrow. So now if you look at the headline, let's go to the headline of Bloomberg. That's the main financial news. US stock closed lower in volatile trading session. Trump see transition problem with China tariff at 145. Brutal reversal in stock show peril of Trump tariff swings. 576 billion stock ETF juggernaut hit by extreme dislocation. US ally greet Trump tariff U-turn with relief and defiance. All about the tariff, you know, all about the tariff. All about the tariff. Trump is already slowing global trade as company pose order. China leader to meet on stimulus after Trump tariff shock. Walmart missing price, short trade chaos come for consumers. Anyway, US inflation to show some relief ahead of tariff impact. There's a lot of contradiction, you know, a lot of contradictory data in the market. A lot of people are saying, yeah, all this tariff is going to make inflation go much higher. But everything we see on inflation data so far is going much lower. Let's see what will happen. Only a few weeks ago, we would think that it would be a bad idea to go after the world with the new tariffs and so on and so on. But now, most of the countries have caved. They want to negotiate a new tariff deal. Only China is the only one standing, you know. Will they stand longer than it is right now? Maybe, because they are so proud, you know, but they cannot survive without the US consumer. Without export to the US, they cannot survive. It's just too big of a shock to survive. Everybody knows that. Everybody who understands about economics knows that this is a huge shock to China. You lose half of your trade surplus with one trade partner. Half of your trade surplus. Or you're going to substitute half of your trade surplus with other trade partners around the world. You cannot do that. You have to be realistic. And I'm the one who is realistic. And that's why you need to stick to your stock investment, because one day, like the one we saw yesterday, you're going to treat, finally China agreed to make a negotiation. I'm going to pause 1 month or 2 months the exorbitant tariff on China. Then what do you think will happen in the market? They're going to skyrocket like even more than the one of yesterday. And everybody would have sold. Everybody would say, oh, you know, this is the end of the world against like COVID or all these other crashes like global financial crisis, the end of the world, always the end of the world. But we are still alive. All of us, we are still alive, you know, not the end of the world. It's not going to be the end of the world before the tariff. It's going to be the end of the world for nothing at all, except maybe a meteorite just hitting the earth, then we all die. But other than that, there will be a tomorrow, you know, maybe 1 month, 2 months, 3 months, never mind. It's going to recover. You're going to make a lot of money. Just enjoy the buy cheaper. Old firms, if you don't want to top up, that's okay. But don't sell your investment. Don't sell your investment to the one who have a long-term horizon. Don't be the loser in this story, you know. If you win, you keep. If you lose, you sell. If you sell, you become the loser of this game, you know. It's not difficult to understand. Can go lower for sure. 100% can go lower. But eventually we'll go higher, much higher. Always has been the case. Always has been the case. So trust the market. The market over the long term go always up. Okay. Subscribe, like, and leave a comment. Thanks so much. See you tomorrow. Bye.